Hello traders, welcome to the video. In this video, I will show you how you can use the CCI indicator along with the moving average to catch spikes in the boom and crash market. So if you look carefully on my chart, this is 1 minute time frame and this is boom 500. So this strategy works very perfect on the boom and crash 500. So it also works on the 1000, it works on the 300. But if you have a small account, let's say like $20 account, $10 account, so you can use this boom and crash 500 market to make $10 to $15 daily. But if you have a larger amount of money, let's say $100, $200, you can apply this strategy to all other boom and crash, 600, 900, 300, 1000. So it all works in all boom and crash. And if you take your time to study it, you will see that it is rewarding. If you look carefully on my chart, I have just three indicators. I have the RSI, which gives this 90 and this 10 level, where the 90 is the overbought level, where if markets buy to, it is likely to sell to the downside, and the level 10 is the oversold level, where if market spikes to, it is likely to buy to the upside. And here I have the CCI, which I will show you how you can also use it, and here I have the moving average. So before I go into explaining this strategy, let me quickly show you settings to my indicator. First thing you do is to click on this indicator icon over here. I have just three indicators as said. So the first indicator is the moving average. To select that, click on this F icon on the main chart. Moving average, click on that. Make your period to be 10, shift to be 1, method to be linear weight, apply to close, style, 3 pixel, and select color of your choice. After that, click on save. So the second indicator, which is the CCI, which is commodity channel index, click on the F icon on the main chart, scroll down a bit. This is commodity channel index, click on that, make your period to be 100, apply to pick up price, style, 3 pixel, and select color of your choice. And for the levels, click on this pen icon over here, add level, type 00. After that, click on save. For the last indicator, which is the RSI, Relative Strength Index, click on the F icon on Indicators Windows 1. Scroll down a bit, RSI, click on that. Make your period to be 15, apply to median price, style, 1 pixel, and select color of your background. If your background is black, you select black. If it is white like mine, you select white. For the levels, click on this pen icon over here. Add to add level, type 90 and 10. Style, 2 pixel, and select color of your choice. After that, click on save. So if you follow my settings correctly, your chart should look exactly as what you see over here. So the first thing you want to pay attention to when trading this strategy is change in market structure. So what is change in market structure? We all know how market structure moves. For those who have watched my previous videos, market moves like this: high, low, high, low, high, low, high. So here you see that the high is lower than this high. The next high is lower than this high. The next high is lower than this high. So once you have that, anytime you have market goes like this and go above this high, so you know that markets have changed its structure. So now market is likely to go like this: high, low, high, low, high. So this high will be higher than this high will be higher than this high will be higher than this high. So here market is in an uptrend and here market is in a downtrend. So this illustration that you see over here is a very good resources for this strategy. And for the downtrend, market is coming from an uptrend, high. So once you have market goes below this low, then it is likely to continue down. So this thing you see over here is very, very effective in the boom and crash market. So in the volatility market, it may not be as clear as possible, but in the boom and crash market, it is well respected in this market. But one thing you should know is that you cannot just go on your chart and be looking for the change in market structure. So that is why we apply this CCI indicator and the moving average as a confluence for us to know exactly when this change in market structure is valid and when it is not. So what are we looking for? This is the bull market. So over here in our RSI in the bull market, because we are buying to the upside, so we want the market to be oversold. So we are waiting for when this candle will push this CCI into the 10 level. Like I said, that the 10 level is the oversold level. Then we will now look to buy the bull market to the upside and follow the spikes. But before we buy, if you look over here, this is where we apply our market structure. Low, high, low, high. You see that this high is below this high. Another low, another high below this high, another low, another high below this high, another low, another high below this high. But if you look over here, we have a low and then a high that goes above this high, which is confirming to us the market is likely to go in an uptrend for a short period of time. Once you have that, so one thing you want to see is, as this CCI enter into the 90 level, so as you can see over here, this is where we have the high, so it has not entered into the 90 level, so we can take our buy and target this 90 level. We enter our buy here, stop loss can be below this low because we don't expect the low to come below this low. So if market comes below this low, then you know that your trade is invalid and the market is likely to continue in a downtrend. So you can see over here, we have a spike, then we have another spike that pushes the CCI into the 90 level. So once you have that, you close your trade. Hope you understand the illustration that I have given. So let me show you more examples so that you will understand better. So over here, this is the current market. So this strategy is playing out currently. And with this one, you can cash a longer move because if you look over here, we have a low, a small high that did not go above this high. Then we have a low and then we have a spike to the upside that breaks this high. After the CCI have entered into the 10 level. That is very important. The 10 level is the first thing you wait for. So once you have the break to the upside, you enter your buy immediately. Stop loss will be below this low. Then you hold your trade until when it enters into the 90 level. As you can see over here, we have another spike, another low, another spike that break this high. We are expecting market to continue in an uptrend until when it enters into the 90 level. So in this condition, you can also manage your risk. So here, spike. Once you have a spike that goes above this high, then you can move your stop loss from this level to this level. So if market comes to this level, you risk less than when if market comes to this level. So let me go to the crash market and also show you how it works over there. So this is the crash 500 market. Like I said, with small accounts, you get perfect entries in the crash 500. So over here, you can see how the CCI enters into the 10 level after market has spiked to the downside. But in the crash market, because we want to sell market to the downside, so we focus on the overbought level, which is the 90 level of the RSI. So we want the CCI to enter into the 90 level. Then once we have that, then we target the 10 level after we see a market structure shift. So here we see market generate high, low, high, which is confirming uptrend. So we want to see a market shift. So over here, we see our market spikes to the downside and break this small low that you see over here. So once you have that, you can enter a sell. Stop loss will be above this high. You can take it a bit higher because sometimes it can still weak that high and still continue in your direction. So if you take it a bit higher, although if you take it at the exact top of the candle, you will not get taken out. But many times you should try and take it a bit higher. So we have spike, then we see a little retrace, retesting the moving average, spike to the downside. So once you have this spike, you can move your stop loss from this level up to this high over here. Stop loss here, market here. Then what is our target? The 10 level. So you can see over here, spike, retrace, spike. As you are seeing spike to the downside, you continue to move your stop loss so as to take some profit and to minimize your risk. So you have a spike again, breaking this low, another spike, breaking this low, another spike, breaking this low, another spike. You see entry here, stop loss above here. You see how many spikes you have been able to cash up to this level. So you see over here, spike, and it enters into the 10 level. So once you have that spike to the downside, then you close your trade. So one thing you should know is that sometimes you will not get this perfect move to the downside where you cash a longer spikes, while sometimes you will get this nice move that you cash a longer spikes. So if you take your time and you go back on your chart and backtest this strategy, you will see a lot of examples. After backtesting, I want you to go on your demo account and trade it in a live moving market. Make sure you try and perfect your entries, because that is the most important thing when trading this strategy. Then you can add more things to it if you want to enhance your own previous trading strategy. So if you find this video helpful, don't forget to like this video, subscribe to this YouTube channel, and turn on the notification bell so that you get notified anytime I release a new video. You can also check out my other videos that are displaying right now on your screen. Thanks for watching.